Hey there. Thanks for tuning in to the Money Wisdom Podcast powered by Johnson Bernetti. We're glad that you're with us. My name is Jake Dozer. I'm a certified financial planner, and I'm here with my friend and colleague, Nick Colantuono. Nick, tell us about yourself.
Jake, thank you as always for the intro, and listeners, viewers, thank you for tuning in with us again on our Money Wisdom Podcast. My name is Nick Colantuono, certified financial planner here with Johnson Bernetti up in our Boston offices. So thanks for being with us.
And I'm here in Connecticut. I suppose we're probably looking at the same weather and all that stuff, but I'm still partial to Connecticut. You Boston people out there, you know. But we like you enough to keep you on the podcast. So no, I'm just kidding. I'm just trying to stay out of your way on the good advice you give. And with that being said, we have another question in front of us from our question series that we're receiving from, as the friends our PBS say, viewers like you. And so if you have sent this question, we appreciate it. If you are listening today and you've never interacted with us or have questions and you have things that you want to talk about, visit us at johnsonbernetti.com, submit that question. And who knows, maybe the next time you tune in, you'll hear it. And so that you can find out if you are that person whose question that we're covering, be sure to like this video, subscribe so that you see the videos that are coming down the pipeline, because we've got them slated for many months to come. And be sure to share it if there's somebody else out there that you think would find this content helpful. So without further ado, let me get to the question that we are posed today. Here's the question. The question says, does it make sense for me to keep paying for a life insurance policy now that my wife and I are both 67, have no kids, and our home is paid off? We're both professors and plan to retire at the end of the school year next May. Very specific circumstance. But effectively, the meat and potatoes of that question is, I've got life insurance. I feel like it's served its purpose. What do we do with it now? Nick, tell us your thoughts.
Yeah, it's an interesting one. Look, a lot of people, when they're in the earlier phases of their kind of wealth building, right? I think of myself. I've got a 2-year-old. I have a 4-year-old. I have a mortgage, right? I certainly have a need for life insurance. I think of my parents, my parents are in their 70s, right? Their mortgage is, minimal, right? They've got a house and they've got their assets. I don't think they're really looking to be on the hook for monthly premiums for this insurance policy just to leave me and my sister a bunch more money if they pass away. So their need for life insurance, I would argue, is minimal. So it's all on a case-by-case basis. And I just hate to think that there's a lot of people out there paying for something that they don't need. Not that you didn't need it in the past, and not that it wasn't the right thing for you when you were recommended it or when you bought it. But again, you have to make sure it's the right thing for you now.
Yeah, you're exactly right. You have to ask yourself first, what is the purpose of this purchase of life insurance? Are you looking to, here's the common ones. I'm looking to, well, if I pass away, I don't want my family saddled with debt. So you're going to buy life insurance at least congruent with the amount of debt that you have. Here's probably the more poignant one, am I buying life insurance to replace the income that my loss is going to substantiate for my family? So if somebody makes $100,000 a year and they're 35 and they're the primary income earner in their household, where they're likely going to be producing income for the next 30 years, and let alone the money that they're not contributing to a retirement account. And let's say there's somebody like Nick with a child 2 and 4 years old. Well, in this circumstance, if Nick isn't the only income earner in his house, but if Nick was, well, he's got a kid in the house minimum another 16 years. So he needs to determine how much income do I need to replace so that my significant other can care for my child until they're out of the roof at minimum. So you're looking at debt reduction. You're looking at income replacement. You're looking at legacy. If I were to pass away, if I don't have the assets otherwise, how am I going to leave something to my family? Now, I would argue that just like what they tell you on the airplane is true, it's true in real life, is when the oxygen masks descend, you first put the oxygen mask on you before you put it on your kids. Certainly, we're seeing that people are starting to recognize, I think that's the trend I see, that leaving a legacy is good, but it's certainly not something you should do at the jeopardy of your own retirement plan. So that's one exercise with caution. Although I love the thought of it, of taking care of your loved ones beyond the grave. So we're talking about income replacement. We're talking about debt reduction. We're talking about a legacy. What other needs or functions can life insurance serve for us?
It's a good question because there's a lot of different types of life insurance. The most basic type, the most, quote, kind of cost-effective type is where you're buying a big death benefit at the lowest amount of premium. This is called term insurance. Now, the good thing about term insurance is you can get in most cases, a lot of life insurance for a relatively low premium. The bad thing about it is it's not guaranteed. In other words, you might have a 10-year term or a 20-year term or a 30-year term, which means at the end of that 10 years or 20 years or 30 years, you no longer have life insurance. And chances are, if you make it to the end of that 30 years, well, all the money you spent is gone, right? It was the cost of the insurance. I often think about why you have insurance. And in the event of life insurance, it's oftentimes, right, if you pass away, you need to replace income, or you want to make sure that your family or the people who rely on you and your income are not kind of, shut out and don't have to uproot their lives. I think of why I have insurance on my house. It's because, if my house burns to the ground, I need to be able to account for that and rebuild the house. But just because I have it does not mean I hope I use it. Right. So it's oftentimes a balancing act. A lot of folks are coming in with these cash value life insurance policies, whole life, something where it's a little more expensive because, it's kind of built on the foundation of like diversifying your investments. Right now, again, I always kind of argue that insurance is not an investment. But there's different policies that work in different ways. So whoever you're working with, you want to make sure that they've got a full blown feel for what your needs are. And if there's something, i.e. an insurance policy that is resulting in an expense for you every year, you need to make sure it's justified.
Yeah, that's exactly right. And I think some closing thoughts that I would throw out there are, if your life insurance is sabotaging your day-to-day lifestyle, not necessarily like discretionary spending, but like fixed bills, if it's sabotaging the way you live your life in exchange for making a sacrifice for your family beyond the grave, what I would argue is, unless those people are truly financially dependent upon you and incapable of providing for themselves, it's something you should consider seriously about whether you should keep it. Another example is, if you do have one of these permanent types of life insurance policies and you have an excessive amount of cash value built into it, and you have a death benefit that is covering a need that you've no longer needed, you've outgrown, well, one of the things you should consider is don't surrender it right away, because it might be a taxable event. And further, because that cash value, if you surrender it, is now taxable versus, the death benefit being almost always tax-free. So you should, in those circumstances, say, should I do something like keep paying this? Or should I maybe use the cash value to pay the death benefit? I recommended that to somebody just this morning. $700,000 plus death benefit, $150,000 in cash value. And I said, you don't need this anymore, but you'd be silly to get rid of it. Use the cash value to pay the death benefit. Otherwise, if you die with the death benefit, the cash value disappears.
Yeah. Jake, one thing a lot of people don't think about with these cash value policies is as the policy owner, you can access that cash value as a loan. And as you're aware, we talk about taxes. Loans are not taxable events. When you go out and you get a mortgage, you don't pay a tax on that mortgage amount. You pay a tax on what you bought with the mortgage, but the same is true when you access cash value within a policy. And a lot of people are shocked. Maybe they've got a $50,000 death benefit with a $40,000 cash value. Well, what you're really doing is you're funding your own death benefit, because when you pass away, the company keeps the cash value and pays you the death benefit. So the net amount at risk to the insurance company gets smaller and smaller and smaller, the bigger and bigger and bigger that your cash value amount becomes. So if it is an asset of yours, leverage it as such. And oftentimes taking money via policy loan is often a much better, from a tax standpoint than just cashing out of something altogether. And then you get hit with a big tax bill at the end of the year.
Man, that is such a wise thing to consider. Man, there's so much more that we could talk about with life insurance, and maybe we'll follow this up with an episode just about life insurance. But I think it's important when you're making these decisions, needless to say, you need to make these decisions in concert with how you're doing everything else. You need to have an investment plan. You need to have an income plan. You need to have a tax plan. You need to have a insurance plan. You need to have a legacy plan. You need to have an estate plan. And all these things should be communicating together, whether they're directed by the same person, directed by a team, directed by people who help you shepherd it together. All these things should be talking to each other. Nothing should be discerned on an island. So with that being said, we have a resource that helps people understand how to knit all these things together as they enter retirement. It's the book that derives the foundational philosophy of our firm. It's called The Money Map, written by Joel Johnson, our managing partner. And so if you'd like to get your hands on The Money Map, simply text the word MAP, M-A-P, to 800-757 0436. You'll find this information in today's show notes as well. And with all that being said, thank you for tuning in to the Money Wisdom Podcast. We'll see you next time.
Investment advisory services offered through JB Capital LLC. Insurance products offered through JN Financial LLC.